And today we shall be looking at Pennant Pattern. So let me just read the theoretical aspect as usual. The pennant cluster looks like the symmetrical triangle. Oh, remember we did this, right? We did this I think maybe last week or something, or maybe 2 weeks ago. You can just check back to previous videos to confirm that. But its characteristics are not the same. The pennant has the shape of a wedge of consolidation. It has usually appeared. Okay, let me just edit this because I was like typing so fast. Okay. It has usually appear after a sudden upward or downward movement. So background, the pennant is a continuation pattern. Instead of S blah blah blah. Okay. The thing that we are looking here is that when assume now that we are already on a uptrend and then we have some kind of ranging market, we are going to expect the price to close and then continue being bullish. You get what I'm saying now? Uptrend deals with being bullish. It is like the market will keep going up, and then we still going to be looking at maybe some some retest and then keep going, retest and keep going. But in this sense, whereby we are looking for a pennant pattern, we are going to be looking at just two types of pennant pattern, and then the first one is going to be the bullish pennant pattern. And then we have the bearish one. Like we all know, the bullish, like that's when it's on uptrend, and then the bearish works perfectly when it's on downtrend. And then we have the bearish one, bearish pennant. Okay, bearish pennant pattern. So this is how they work together. And I would like to just draw it. I might not take us to the chart, but I would just like to do this because I want us to be having this class as very kind of how do I put it, short, so that we can be getting the whole thing that I want to do here. Okay, this symmetrical, right? You remember symmetrical coming from down, upside, and then go back again, something like that. But here we are going to have it as the bullish one, and then we have this consolidation, or you can call this ranging, but it's going to a close, right? And then boom, you have it what? You have it break to the upside. So most of the time, even if you check your chart, they always come out, because now you have your chart like consolidating, and then that it can't keep going this way. Like there's no chart you ever see keep going this way, keep going this way. No. Something's going to happen. Something must happen. You get what I'm saying? So like up or down. But now we figure this out to be a bullish pennant, because price is consolidating going to a kind of close, and then boom to the upside. So if you are trading currency pair actually, or maybe indices or commodities or whatever that you're trading, these always happen at least I think let me just say Asian section, during Asian section, and then you can have some of these impulse move out or breakout during London section or New York section. Okay, so depending on the time or the country that you are actually, so it's going to depend on the time that you're going to have your breakout to. It can actually be midnight of your time if you're in Canada or New York or whatever, comparing to London section or whatever. So we can actually have the market keep going this way. No, there must be a breakout, right? And then that's why we have it as a bullish pennant. Maybe you've checked your bigger time frame, and then you've seen okay, the market is actually on a bullish trend, and then you see this kind of consolidation. What you're going to look into after you confirm that on your like 4 hours time frame, because like maximum 4 hours time frame, and then you've seen you come to your 30 minutes, 1 hour, and then you see consolidation like this, you can just look forward to for the market to break out to the upside, and then target the next level of resistance, like we used to do. We base on support and resistance. And then again, let's look at the bearish one, whereby we have it this way as well, just like drawing the triangle for the symmetrical triangle. And then you have your price when you have the market coming from a downtrend and then consolidating, probably on Asian section, or like pre-London section or pre New York section. Then boom, you have to wait and then let's say the chart break to the downside. You get what I'm saying now? So this is how we expect it when it comes to pennant pattern, because they work in a way that they create some kind of sudden movement. Yes, it's sudden push out. If you're actually trading gold, okay, because I do trade gold. If you actually trade gold as a commodity, you're going to be having this, because gold has a lot of volatility in it. So there's going to be a lot of volatility that happens in the market, and then whenever you see this kind of opportunity, you can just take them and then put your SL somewhere around here. Okay, your SL can be, let me go long here. Okay, the target, and you can have your SL some pips away from the last support. Okay, just target something around this place and then target the next level of resistance. Actually, it's going to be above this. Okay, if the market is going to your way, to your direction, and then you can target it like this, and then let's go short as well. Let's see how it works on short. You have to target your SL to be somewhere very somewhere around this place, and then to the downside as well. Okay, it's going to at least break below than this, and don't be confused. It can actually retest again, like when the price break out, and can still retest like this. There can be some kind of retest like this, whereby the market retest after breakout, and then you keep going up. Yeah, it's still the same. Okay, guys, that's why you're going to have your SL below the former support, and then you can have it like this as well, whereby the price retest again and then start going and start pushing to the downside here as well. And that's why you have to have your SL at the former resistance, okay, at least, so that in case you have a fake out, a fake out can actually be like this. A fake out can almost be like this, something like that kind of thing, and then whereby the price is not going, and or maybe it has not yet gotten to the place it's going to break out, and then it's like doing something like this, so that it's not going to stop you out if you have a very tight SL. So you don't need to have a very tight SL. You need to have a very good SL, at least maybe 10 pips, I don't know, depending on what you're about to risk pertaining to your account balance, your trading account balance. And one of these days I'm going to make sure I do a video on knowing how much you can actually risk. Maybe you have a $100 account, $200, 1,000, 10,000, 100,000, so you can know what you're going to risk and how you're going to go about it. So thank you very much, guys, for watching. We'll meet tomorrow, and then we'll learn something new. Thank you very much. Like, subscribe, and comment, and share to your friends as well.